Hi, this is EURJPY and today it's Monday 24th of June 2013 and the time is 5:11 GMT. We are looking at the H4 chart of the pair and I'm going to give you a signal using one of my favorite systems, which is the Fibonacci trade setup. And it's very simple and very powerful. First condition is that we have the last active wave, which is this, must be above 150 pips. This active wave is above 600 pips, so it is a a huge wave. It shows that wherever the price heads next, the profit potential is very big. The second condition, which has to be met, is that price must reverse from this wave and enter this zone, trigger this zone. The zone is between 61.8 Fibonacci level and 38.2 Fibonacci level, and the zone between these two levels is our trigger zone. Before I continue, I must tell you that you can draw Fibonacci levels putting 100 up and 0 down, or the opposite, 0 up, 100 down. The ratios remain unchanged, they remain the same. My favorite way to draw Fibonacci levels is to put the 0 point where the reversal is, the correction starts. So we had this wave, this big downward wave, and the correction, the reversal maybe, started here. So I put my 0 point here, and now I have my 100 point up here, and 61.8 is up, 38.2 is down. Next condition, once we see that the price triggers this zone, and this happens when one candlestick closes inside this zone. Next we look for one whole candlestick to go either above 75.0 Fibonacci level, this level, or below 23.6, this level. I repeat, once our condition is fulfilled, the condition for the trigger zone, once we have one candlestick close inside the trigger zone, the next condition is to see one full candlestick above 75.0 or below 23.6 Fibonacci levels. If we see one whole candlestick above this level, which looks like being the most possible scenario, then the only final filter we use is to go to the daily chart and check RSI. RSI must be above 50 for us to enter long. If we see one whole candlestick closing below the 23.6 Fibonacci level here on the H4 chart, on the H4 time frame, then we go to the daily time frame and we look for RSI, and we try to, and if it is below 50, then yes, we can enter short. Once we enter long, because one whole candlestick on the H4 chart closed above 75.0 and RSI on daily chart was above 50, if we enter long, we put our stop loss 100 pips below our entry, or I'd like to be a bit more, to give you a more visual representation of your stop loss placement. You can put it a few pips below 75.0. I would say 20-30 pips, but sometimes depending on the average range of the average size of the candlestick of the pair, it might be 50 pips or even a bit more, okay? So keep in your mind the rule of 100 pips below your entry and see how many pips you should put your stop below 75 in this case. If there are 50 pips above 75, then you will put your stop 50 pips below 75.00 level. I want this reference with 75.0 level because I want to explain to you how to trail your stop in the future as the trade progresses. Now, let's go to the short entry scenario. If we see one whole candlestick close below 23.6 on the H4 chart, and if on the daily chart we see that RSI is below 50, we enter short and we put our stop 100 pips above our entry, or about 50 pips above 23.6 Fibonacci level. Now, how we trail our stop? If we enter long, we enter somewhere here, and our stop is here. So we wait for the price to go above this Fibonacci level. We wait for the price to go near the next Fibonacci level, somewhere here, and we then trail our stop from here, here. And we trail it following the Fibonacci levels. The same goes for the opposite direction. If our price moves down and we enter short here, then we wait for the price to go to the next Fibonacci level for us to trail our stop from here, here. We trail our stop by successive Fibonacci levels, and we exit when our stop is hit, which means that there is a major reversal. So thanks for watching and happy pips.